Good afternoon and welcome to this edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. Coming up on the show today, we take a look at the new people management software tool. This helps companies improve productivity. Then we'll be discussing the outlook for consumer goods group AVI and investment firm PSG. And with National Savings Month just around the corner, we are later joined by a panel of experts to share their tips to help you cut costs and start saving. But before we get into all of that, do remember that we welcome your comments and any feedback. You can send it to us to moneymatters@abn360.com. But first, let's take a look at the trend of the week. Human capital is one of a company's most valuable assets, but it is also very expensive, which makes it important that people are well managed. PRP Solutions is one company that spotted a gap in the market for automated people management. Joining me in studio today to discuss how this can help improve productivity is Kriya Govender. He's the Chief Executive of PRP Solutions. Kriya, thanks for your time.
Thank you, Tony.
So this is a solution that will help managers better monitor what their employees are doing. How does it work?
Correct. To me, it's really simple. When we looked at the solution, we looked at the four basic functions of management, which is planning, organizing, controlling, and leadership. And what we found was the majority of the managers are spending their time paper pushing rather than leading their troops. So what the solution aims to do is to take away the admin-related tasks when it comes to planning, organizing, and controlling. So being a cloud-based solution, you can access it from anywhere. You can plan the resources the way you want to, and you can come up with the most efficient plan. So the solution allows you to plan more efficiently, get exceptions in real time, and that's the key difference with the solution. In real time, today you will know what is going wrong. Where are you deviating from your plan? Where are you deviating from your budgets? So that's the key differentiator with the solution when you look at other solutions available out there.
Can it be adapted to any business? Because I'm thinking, it's a tool. It must cost money. If I'm a small business, large business, any type of business, would this be suitable?
Absolutely. It's really simple to use, and the solution is currently being used across various industry segments, whether in outsourced services, whether in manufacturing, whether in the white-collar environment. Your people are your people. That's your most valuable asset that you have, and the way you manage your people are exactly the same in any organization. And this is why the solution is so simple, and it can be used in any industry segment.
Kriya, give me an example of how this would work. So it's a cloud-based solution, an example where you are seeing efficiencies being improved. So exactly for a manager on a day-to-day basis, I would need to type in what and get what and have, just give me some context around it.
Absolutely. I'll give you an example in the manufacturing sector,
yes.
which is they're very productivity driven. You need outputs by a certain time. Your sales team have sold a whole lot of your products, and you need to get production going. And the first step is to plan that production. So what the manager would do is go into our solution, plan the number of resources that they have, and if they're planning more than they're required, the system immediately flags them that in your plan you've planned more resources than you need, and you're obviously going to exceed your budget. So immediately then and there, the manager can take the corrective action, replan, and get the most efficient plan possible. Immediately after that, what happens is we gather the information in real time. So as the employees come into work, for example, you're walking through your access control. When you're walking through your access control, you either use your biometric, your fingerprints or your facial recognition to verify that you are Tumi, yes, and you're arriving at work. And as you come in, the system immediately gets that information into our solution, and we present the managers with exception reports. So we'll say, today you've planned for 10 people to come to work, 8 people have pitched up, and these are the names of the people that didn't pitch up. Or these are the people that came in late. Or these are the people that came to work that didn't plan to come to work today. Okay. So immediately the managers can take their corrective action. So in real time, they're making the decisions rather than after the fact.
You mentioned a couple of things there, biometrics, real time. Also reading that this is also GPS enabled. How do employees feel about having that big brother aspect, people getting into your privacy, knowing where you are, and what's the take up?
So to me, if you look at it today, most employees want to be productive. They want to be seen as being productive. So the uptake's been really good because, you know, in the past they'll be working on various tasks, etc. And managers are not knowing what they're doing. Now the managers are knowing what they're doing, how productive they're being. And there isn't really an issue for those people that are productive. Obviously, on the other hand, you get people that are non-productive. And from a manager's perspective, you want to be able to weed out those people. And this is now reporting on those exceptions, on people that are not adhering to the plan, not adhering to their schedule, etc.
Kriya, thank you so much for coming in, telling us about the solution in place that will, as you said, help weed out the guys that aren't doing what they're supposed to do in terms of productivity. Thanks so much. That is a big thank you to Kriya Govender. He's the Chief Executive of PRP Solutions. Let's now take a look at our punt of the week. Branded consumer goods, the group that is AVI, has had a good run with its share price up 40% over the past year. The question is whether this can last given the tough economic climate and households facing rising living costs. In Cape Town, we have our Finweek contributor, Moxima Gama, who joins us from that studio. Moxima, as we mentioned, AVI has done very well, but the economy is very, very tough. Can they keep this up?
Look, apologies for the groggy voice. AVI is pretty much a one-stop shop. So what they are able to do is at least produce a lot of products that are economically beneficial to a lot of consumers. For example, instead of milk, there would be milk substitutes. Excuse me. So they have a tendency to at least, and they're very well diversified, which means if one sector battles, the other one can compensate. They're in food, cosmetics, shoes, so they tend to then be able to withstand a lot of economic downturn because of that.
Moxima, unfortunately, we're going to have to leave it at that. We do have to make sure that you go home, take some flu meds, and do what you're supposed to do to get yourself back up to top form next week. But thank you so much for coming in and telling us about AVI and the fact that they have been a very strong company in a very, very competitive and tough economic environment. That's a big thank you to Moxima Gama. Of course, she's our Finweek contributor. Now, let's move on to this week's cover story. It's hard to believe that 20 years ago, investment group PSG and some of its most successful investments, such as Capitec, did not even exist. Today, the group has influence over a large number of sizable companies with a combined market capitalization of 130 billion rand. I'm joined by Finweek editor Jana Marais to discuss the outlook for PSG. Jana, thanks for your time. From one successful company to another, PSG, they've done really well. Capitec, just being one example, but can they replicate the success?
I think that's the golden question, and that's what everybody wants to know, because I think PSG is trading at quite expensive levels. So you want to know, is there potential for this thing to continue? Look, I think history has shown us that it's probably wisest not to bet against PSG's management team. So I would say, yes, I would certainly be keeping an eye on whatever they're putting money into in future. I think the one thing that everyone is keeping an eye out is they've got a just over 50% stake in a new company, Energy Partners, which basically partners with businesses to help them find electricity solutions. And they're planning to list that within the next 2 years. So that's certainly a space to watch. So yes, I think interesting space, and don't bet against them.
Finweek had an interview with the chief executive. What were some of his insights in terms of the outlook for the company?
Look, I think one of the things that was interesting for me reading it is that he's actually quite optimistic about South Africa. One of the things he said is, you know, if he looks at the way companies are performing, it's unlikely, he can't believe that the economy is only growing at, you know, barely 2%, if that, it's not even there, because the growth, and they see a lot of opportunities. I think the other interesting thing is that he says they don't actually necessarily need another big Curro or Capitec or Zeder, because those companies within themselves have so many opportunities to grow still. So in the medium term, they're quite comfortable where they are. And they still see quite a bit of room for growth. So yeah, interesting views. And also he shares a few of the tips, things that he's learned from his father, Yanni, who obviously started PSG 20 years ago. So I think it's an interesting read, and it's obviously a privilege to grow up around the dinner table learning from somebody like that.
Interesting to see that he's still very, very bullish on South Africa and well, the economy as a whole. In your first answer, you mentioned that PSG is rather expensive. So what is the consensus, or what do you think in terms of it being so expensive? Still a good investment?
Look, I think overall it's trading and all its units above PEs of 20. So I suppose if you're a value investor looking for a bargain, PSG and its constituents certainly is not the place you're going to be putting your money. But then I also think, given the track record of the company, personally, I think there's certainly room there, and it's certainly worth a consideration at least. I think we have comment from Canon Asset Managers saying, for example, it's because of its high valuations, it is quite sensitive. It will be quite sensitive to a market correction. But then I think there's a lot of companies on the JSE at the moment where you can say the same thing. So perhaps maybe we should see how things play out. But I certainly think it's worth a look at.
Jana, thanks so much, but you'll be staying with me. We're going to a very quick short break, but when we come back, we'll have a panel of experts to share their tips to help you cut costs and start saving. Stay with us.